All right, hello everybody. Welcome back into the NASDAQ Option Superstars program. Did want to get a video out here this afternoon covering our new trade that we put on United Airlines, symbol UAL. So I'll get to that in just a second. Some quick thoughts on the market here today. It continues to be a very news-driven market. We had the futures were down a good portion of the overnight hours. We did have some headlines hit out of China. Potentially there's a chance for some negotiations going on again, blah, blah, blah. We've been down that road before, right? How many times have we seen headlines hit just like that? It's been going on for a year now, and nothing ever gets resolved. Is this the magic formula? Is this the magic time now? We'll have to wait and see. But as a result, markets rallied up. They gapped higher, and it was one of those sessions that we moved higher pretty much the entire session. We did have one little sell-off late morning. We had some news out of the EU. So another headline caused about a 5 to 8 minute sell-off, and then it was just right back to the upside. We continue to see a market very, very news-driven. I don't like to get sidetracked by news all that often, but I also saw a headline here today. If we go back to Monday's session here this week, it felt like the market was ready to get beat up, and then magically we had a headline hit or a Trump tweet that said, hey, China called a couple times over the weekend, or there's talks going on. Well, there's a headline that hit today that basically said there were some Trump aides that brought up the fact that Trump made that news up. He saw the markets tanking. He made up the news of their talks being held between China and the U.S., and solely based on trying to save the markets. Now, if that was anybody else other than the president, other than Elon Musk, if it was any of us, we'd be going to jail for that. But yet here we are, markets rally 300-400 points on that news. It continues to be a tremendous market, no doubt about it. Makes it very difficult because we've had these wild swings back and forth. We're finally getting some follow through on the upside here. This is day 2 in a row of a move to the upside. We'll see if that continues into the end of the week and into early next week. But I bring all this up. This is why we've been trading the way that we have lately. We've been trying to get conservative. The BABA position that we closed out, we took a loss on that trade here today. The reason why we closed it out, I want to keep those losses small. We took that position with 50% of our normal size. I'm getting conservative here because of the uncertainty, because of the lack of follow through in both directions in this market. As soon as we start to see things open up, even if it's on the upside, if we start to get some trending type moves to the upside, we'll adjust our focus. We'll continue to, take a look at the long side and shift our focus to more long calls at that point. I'm still seeing a lot of messy looking chart patterns on some of these individual stocks. We're also focusing more so on vertical spreads here, just given the overall environment. And I've talked about that in recent videos. But then especially here today with our new setup on UAL, we're taking a look at selling a put spread because we're going into a long holiday weekend. Markets are closed on Monday. For those of you that are newer to trading options, the time decay of an option loses some value from that time decay every single session. However, the time decay is not just there Monday through Friday. The time decay is continuing to add up over a weekend. Well, we know markets aren't closed on Monday, so we have an extra day of time decay there. Because we know that, using some credit spreads here, even though we don't have the home run profit potential, it gives us more ways of making money on the position. All right, so let me bring up the chart of UAL and I'll show you why we're looking at this trade today. All right, here is a 195-minute chart of UAL with our indicators up on the chart. There's a couple things that we have working in our favor here. Number one, if you take a look at the pulse indicator, that's the red and yellow histogram down at the bottom. We have 3 out of the past 5 bars showing as yellow, indicating that we're between a 1 and a 2 standard deviation move on the downside. Oftentimes when you start to see that type of a reading, it's at the end of a nice move. Oftentimes when you start to see markets tire out, and in this case on the downside, we oftentimes see periods of consolidation or even a bounce to the upside. If we go back to the last few times that we've had yellow bars on the pulse, back on the upside, you can see what happened when those yellow bars started to print. See how that move to the upside stalled out and quickly moved lower? We then saw a period of yellow bars here on the pulse. Look what happened soon thereafter. Price action stabilized and moved higher. So now that we have the yellow bars again, we're expecting either a period of consolidation or a move to the upside. Now, UAL had a pretty strong session today. We're right back higher. So I'm looking for 3 out of the past 5 bars as yellow. We had that, indicating that we're oversold. That has me looking for a neutral to bullish type trade. That's why we sold a put spread today. On top of that, we also have our sentiment indicator. That's the histogram down at the bottom that went from red to green. That gave us a long setup. It hasn't hit the entry point yet on 86.79. So we have multiple confirmations here that price action is either ready to move higher or start to consolidate here near the lows. Well, I wanted to take advantage of these readings, and I went to a short put spread. That is a neutral to bullish position. I make money. If UAL continues to move higher here, we can make money from that type of a move. If we move straight sideways, if we move slightly lower, I can still make money from a short put spread. That's the beauty. If all I did is buy a long call here that said, the only way I make money on that position is if UAL makes a big move to the upside and it happens quickly. Going into a long holiday weekend, not really something that I'm interested in. I would rather be more conservative and take what the market's giving us. So going over to the trade page, on UAL, we utilized the September 20 monthly options. I know some of you pointed out in Slack, we've got a number of positions on expiring on September 20. Keep in mind, a lot of those positions we will close out ahead of time. We don't have to hold all the way to expiration, so I don't want you to think we're going to have one of those sessions where you have to close out of 7, 8, 9 positions. That's just not going to be the case. In fact, a couple of our open trades are actually approaching profit levels. We may end up taking a couple of them off tomorrow or early next week. So we'll start to get out of some of those existing positions over the next week or so, start to free up some capital out of those trades. So don't be intimidated by how many trades we have on in the September 20 monthly cycle. So on the trade today, we went to the 83.81 put spread. So I went to the 83 puts. I right-clicked on them, went to sell, went to vertical, and that popped up an order down at the bottom. You can always adjust the order once it pops up at the bottom. I can make sure that I'm selling the 83 put and buying the 81 put at the same time. Keep in mind, for those of you that are newer to spreads, we're trading 2 different options here, but this is done all as one trade. You're not just going to come in and sell the 83 put as one trade and buy the 81 put as another trade. This is all done as one position. I either want this trade to get filled as a spread or not at all. Okay. Now, on this position here earlier, I had a range of fill prices inside of Slack. I personally got filled at 50 cents. So if I go ahead and click on 50 cents here, it leaves us with a situation where we're risking 150 to make 50. And a lot of our credit spreads, we like to be in that risk 2 or 3 to make 1 range. We're at that risk 3 to make 1 range. Why am I willing to accept that? Because I've got 5 different ways of making money on the position. Our break-even point's at 82.50. I don't care if UAL moves up, down, or sideways from here. As long as it stays above 82.50, we're okay. The only move that hurts us is a big move down below 82.50, which we're not expecting because looking at the chart, we already have a market that's oversold. The pulse indicator is telling us to expect a period of consolidation or a move higher. So I'm not expecting a big move lower. If it does happen, worst case scenario, I cannot lose more than $150 per spread. I also make money from time decay adding up and from volatility decreasing. We saw the volatility the last few days market-wide get hit. They suck some volatility out of this market. That helps all of our credit spreads. Anytime the volatility moves lower and you are short a spread, it causes the options to get cheaper, and that's exactly what we want to have happen. All right, so if UAL stays here, it's at right around 84.70 at the close today. We've got about a $2.20 cushion here that this thing could move against us, and we're okay. Any type of a move higher from here or a move sideways, we're okay. We're also benefiting from time decay adding up and volatility decreasing. So there's our 5 ways of making money on the position. Let's take a look at Tastyworks here so I can show it to you inside of the Tastyworks platform. So let me load up UAL. So I typed in UAL in the symbol box up at the top. I clicked on the trade tab here towards the left-hand side of the platform. I open up the September 20 options, the monthly options with 22 days left to expiration. And then I went in and I sold the 83.81 put spread. To do that, I'm going to left click on the bid price of the 83 put. That's going to box that in red, indicating it's a sell order. And then I'm going to left click on the ask price of the 81 put. That's going to box it in green, indicating I'm buying that option. Down below, it summarizes our order. In the lower left-hand corner, it says I am selling one 83 put. STO stands for sell to open. And then I am buying one 81 put. BTO stands for buy to open. We're doing this all as one trade. I can adjust the price here in the middle of the page. It's actually trading for 54 cents mid-price. You could actually have gotten filled at a better price than I did right at the close. So we can always adjust the price there if needed. We can change the quantity by clicking on the left and right arrows here. As I do that, you'll notice the quantity, the order number, starts to change. So it tells you how many contracts or how many spreads you're trading. We're doing this as a net credit. Anytime that I say sell to open in the alert, that tells you you're going to collect premium up front. That is done for a net credit. Because it's an entry order, we do like to set those as date orders. If this was a closing order for a target or a stop, I wouldn't have a problem with you switching that to a GTC or a good till cancel. But anytime it's an entry order, I do like to use those day orders so they cancel at the end of the day if you're not filled. That way you don't get hurt by an opening gap the following morning. We can always, if you're not filled today, you can always place the order again tomorrow morning after the open. All right. So all you have to do is review and send the order, and you're good to go inside of the Tastyworks platform. All right, so on the BABA trade, we also closed out of BABA today. We took a 50% loss on that. It was about a $95 loss per spread. Wasn't ideal. It felt like the market was ready to head lower. Everything on my charts was confirming that earlier in the week, but these headlines just hard to overcome. When you have central banks and you have a president here in the U.S. that is determined to prop this market up, it's very difficult. Okay, from a technical perspective, everything was lining up for us, but it's difficult to overcome a news cycle that is completely dominating price action at this point. So we did take the loss on BABA. Limit the damage there, and we'll reevaluate BABA next week, see if there's something new that we want to do at that point. All right, so tomorrow, this plan for tomorrow, I would expect the first 60 to 90 minutes of the session, I bet they'll be pretty active. Past that, I think volume will start to dry up. We're going into a long holiday weekend, the last hurrah for the summer. A lot of times people take off early. A lot of traders take off and extend that weekend even further. So I do think we've got a little bit of a window tomorrow morning for good volume. That's when we can potentially take some trades off. If we get any type of a higher open tomorrow, there could be a handful of positions that we want to take off at that point. And then we potentially could get one new trade on tomorrow. We'll see how markets open. But anything past the first 60 to 90 minutes, I think it's going to be difficult because volume will dry up and it's going to be more challenging to get fills on trades at good prices. So that's the plan of attack for tomorrow. If you have any questions between now and then, feel free to send me an email, mike@netpicks.com. You can post a question inside of the NetPicks app or inside of the Slack group as well, whatever works best for you. All right, so I'm going to wrap this video up here. Enjoy your evening, everybody, and I'll be back with you Friday as we wrap up the week.